The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and if you have any questions, feel free to give me a call. And this whole show is about maximizing leverage, minimizing risk, being one step ahead of the markets. And we maximize leverage and minimize risk by using Nadex. And we are one step ahead of the markets by using diagnostic trading. Diagnostic trading is where you use fundamental, seasonal, technical, and statistical analysis to basically find out where the orders are placed. And using that information, that helps you determine where you want to set profit targets and put your entire trading plan together to be one step ahead. Because the market is driven by where the orders are. Now, if you have any questions, again, give us a call, 877-927-6648. Again, that's 877-927-6648. Whether you got questions about futures, forex, stock, options, binary, spreads, be glad to hear from you, and always love to hear from other traders, and get a lot of great ideas from them and get to bounce ideas off of them and help them out any way I can. Anyways, let's go ahead and check out where the market is at right now. We got the S&P up strong, up 14 points right now, and just a little bit off of the high. And then we got the Nasdaq up 40.5. We got the Dow up 109 points. We got the Russell up 10.2. Gold is down 23. Copper is, it's down about 1/3% there. We got silver heading on down 1.84%, almost down 2% on the day right now. We got corn down 6 points. That's about a 1% move. And we got soybeans down 23 points. So 1.5% down move on soybeans right now. We got oil up 80 cents. That's about 1%. And we got natural gas, which is up about 1% on the day. Euro dollar heading on up. Dollar showing some weakness against the euro, up 65 pips. We got pound dollar up 53. Aussie dollar down 12. U.S. yen up 28. U.S. franc down 46. U.S. Canadian up 19. So that gets you your quick market update just on where everything is sitting at right now. And let's go ahead and check out the news that's going on today, the fundamentals in the market and around the house. If you've been watching anything at all, you know that Boehner came out with this backup plan and basically saying, hey, let's put something in place to protect Americans just in case this doesn't work. And the House said, no deal. And so now they're trying to make another plan and another plan, but there's all these like good negotiations, bad negotiations, good negotiations. But the news was really good this morning. And it's absolutely, it amazes me, okay? We go in here and you get guys wanting gun control that, like Obama and Reid, that have gun private, they have a carrying concealed gun permit. So it's like, come on, really? And then you got guys that say, President Barack Obama is not willing to accept a deal that doesn't ask enough of the very wealthiest in taxes and instead shift the burden to the middle class and seniors. That's what Jay Carney said. The president is hopeful that both sides can work out a remaining difference and reach a solution so we don't miss the opportunity in front of us today. Okay? And Boehner's reply was, well, that defies common sense. So why would he say that? Well, let's look at reality, okay? The top 20% of Americans, and I'm not talking about the 2% that they're even talking about, the top 20% pay 70% of all the federal revenue on income taxes, okay? 20%, I'm sorry, 30, the middle 30%, the middle class, okay, pay the other 30%. The bottom half pay nothing. So if 30% are paying 70%, how are they not doing their fair share? How are they not shifting the burden to themselves by maintaining that? It just doesn't make any sense. The poor are shifting their burden onto the rich. the people who have worked hard to be successful. Now, I mean, I've been poor. I know it's hard to be poor, and it is nice when there's help there. But somebody doesn't owe it to me in taxes, okay? I mean, there were times where I was hungry, and my mom's like, we got to wait till tomorrow. So I get being poor. I've been there, all right? And, we had those times. But, being hungry also made my mom work hard. And she became a vice president over a very large bank and did very well because she was hungry, not because we were fed. And she worked well, and she taught me how to work hard, not to rely upon others, and, basically change our status in life. The middle class are the ones that always get hosed. Okay, let's just look at the reality of that. Okay, I don't care what you tax the wealthy at. The middle class are still getting hosed. The benefits are not going to the middle class. When the rich get taxed more money doesn't go to the middle class. Let's just look at the reality, okay? It goes to the poor and, of course, those relying upon benefits that are seniors. And really, it doesn't even go there because we're borrowing all that money anyway. We're borrowing over $1 trillion. So all the revenue we're going to tax, he still wants to borrow, basically $1 trillion, which means that even with the tax rate increase, it's still not going to be enough. I mean, he's basically admitting that. Obama's admitting by saying, we want to go in and we want to raise it on all but those making less than $250. And I by the way, I need $1 trillion. He's basically saying that even though we're raising taxes on all of them, it's not enough, and I need to go further in debt. So he's admitting in his own statement, it's just the irony, admitting in his own statement that it's not enough to tax. You can tax them at 100%. You can tax the rich at 100%. Remember, they're already paying 70% of the total revenue. Tax them at 100%, it still wouldn't matter. There's not enough. Okay? And I don't know when they're going to get the clue. So I don't know if it's when finally, I think the only way they're going to get the clue is when either they do tax them at 100% and it doesn't work, a.k.a. California, New York, all these taxes that they have, or better known as Greece. So, or when the Republicans just finally say, you know what, this is going to hurt, but it's just time. So, I don't know. I hope they come up with a deal. I hope they do. We'll see what happens. Market seems pretty optimistic they will. So, of course, market is a, manic depressant, and it goes up and down a lot. So, anyways, we just got to watch it and see how it goes. But it's amazing. It's sort of like this whole union thing on this right to work thing in Michigan. Absolutely blew me away. It's absolutely hilarious. You go in and watch it, and these unions are upset because Michigan passed a right to work law, and we have that in Texas. And basically, that means that you have the right to get hired and you have the right to be fired. Okay, you have the right to quit without notice. So on down the list. It also means you have the right to work for a union without having to pay union fees. Okay, so you can be part of the union. You can get the benefits of the union. Now get this. Follow me real quick. You get to join the union. You get the benefits of the union. The union has to negotiate and represent you on your behalf, but you don't have to pay the union. So you get all the benefits without having to pay anything, and they think that's not fair. Does that not sound like what we're talking about with all the taxes right now? I want all the benefits, but I don't want to have to pay the poor rich, okay? So either you pay for the benefits or you don't. And, they're basically, what it's going to do is it's going to defund the unions, and they won't have the money to organize as well, and that's why they're so upset. They won't be able to fight as strongly. And, unions have their place. Or maybe they had their place in American history. There was definitely a time when that was needed. But, when you're getting paid, $40 an hour to put a bolt on a wheel, I think the time has passed. So, proof being there is no more, way to find a Twinkie. So, anyways, sorry I got a little tangent there, but this is some crazy stuff going on. And, gotta change it up now and then, right? All right, so markets are probably going to be heading back down at this point. That is my guess. I think we've hit all of our deviations, and we're ready to go ahead and start falling. So if you got profits, should have probably taken them off the table by now. And, there's the Dow hitting up at one deviation. You can hop on over. We can check out, say, the Nadex. It was having some nice moves earlier today. And let's see here. What we got? Load that one up. And, oh, well, I'll load that one up in a second. Check out the S&P. I know we had that one on here. I had that loaded in. But basically, they hit their deviations and just, everything's ready to go ahead and move on back down. And while that's loading up, what I'm going to go ahead and go through real quick is just the quick fundamentals we had that came out today and last night. We had a monetary policy meeting minute over here on the Aussie dollar. Those numbers got released. And let's see here. What happened when that number got released? It got released at 7:30 Eastern, 6:30 Central. If I go over here to 6:30 a.m. Central, p.m. There we go. I was like, that doesn't even look right. There we go. You got to see a big bar when you get a monetary policy report. All right. So 6:30. There we go. And so we had a nice, big move. And like I did talk about that, you're looking for 10 to 20 pips. We didn't really even get. We got a solid 17, I guess, 17 up, and so not a major move, nothing to write home about. Just trying to see if there's any distinguishable anything on that one. Not really a whole lot you could even do with it. Let's see. There we go. Okay, well we got a little bit of a move. We got about 35 pips down on it. So we got about 17 up, 35 down. So if you had like a straddle on, end of day today, you could have a decent trade right there. But so looking at that, that was really the only major report that came out last night. Reports this morning, we had the pound, and they released their CPI annual number. Came out at 4:30 Eastern and 3:30 Central Time. So right here, came in a little better than expected. So that's 2.7, and better than expected is good for the currency. Okay, and so that went ahead and did. It took a while before it decided to wake up, but it did actually end up finally leading up on the pound there. And so, decent little trade, about 50 solid pips from when that report came out. But it took its sweet time. And if you weren't trading Nadex, you'd have been pretty nervous on it because it pulled back on you, about 20 pips, 22 pips from when the report came out. And then scrolling on, we have, that's really it. So we had, a couple of things come out today, like current account, showing that the government actually, the import and the export, all that stuff. But really, most of those things are not big deals. We don't really have a whole lot more coming out. There's a current account coming out for New Zealand dollar, but again, not a major report. Stay right there, folks. We'll come back. I'll talk to you about what to be ready for tonight and tomorrow. Be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Just checking some things out, looking across everything, going ahead and talking about what to get ready for tomorrow. By the way, it looks like the S&P just sort of spiked right up against its, without any significant volume, spiked on up and hit its one deviation and is now working on pulling its way back. So anyway, so let's go ahead and check out what we got. I have a trade that I'm looking at right now. It's a pretty low-risk trade. Let me see. I'll show it to you here. It's basically... Here we go. Inside the Nadex platform here. Very low risk, 1435.50, okay? Basically saying that by 2 o'clock in the next 35 minutes, the S&P could be below 2 o'clock. If it is equal to or below 1435.50 by 2 o'clock, then the trade will make $196 if I do 2 contracts. So I go ahead and put in for 97. Let's see here, because there's 5 on there, and they'll refresh the volume. So I have $15 risk on this trade. I can make $495 if the S&P goes below 1435.50. So I go ahead and place that order. Okay. Orders received, orders filled. And then we can go up here and you can sort of see, you know, here in a minute they'll actually refresh that and we'll be able to look at it being up there again. I'll keep an eye on it and let you know when it comes back up. But it's nice because they actually redo the markets. But we'll see if, you know, if it doesn't close below it, then whatever. It was literally a $15 risk to make $485. So not that worried about it. Anyways, and that wouldn't have to be a huge move. You're talking 5 points, but the market could drop. It could stay flat. But if you lose $15, I mean, you pay that, commissions, whatever, going trading somewhere. Anyways, okay, so what do we got going on tomorrow morning? What do you need to be aware of? Well, we do have the German IFO Business Climate Report that's going to be coming out, okay? And so that's coming out at 4 a.m. Eastern Time tomorrow morning. So if you're an early a.m. trader, they're usually off on this number by a little bit. They're not off by a whole lot. And let me see here. I will get the website for you. It's cesifo-group.de. Okay, cesifo-group.de. And basically, it's a composite index based on a survey of manufacturers, builders, wholesalers, and retailers. So they actually survey 7,000 people on all these different categories and these different sections about conditions, expectations. So it is a pretty solid leading indicator about how just the market as a whole, from the manufacturer to the builder, the wholesaler to the retailer, is all feeling about the economy. And by the way, they have replenished the supply. So, they put it right back in there. Anyways, so, and then going on over there, MPC meeting minutes. So the meeting minutes on the pound is going to come out, okay? Now, they have the interest rate votes that are reported on the calendar. The minutes will also include the latest asset purchase facility votes. So there's quite a bit of information they put in there, but it's the breakdown of the members' basically votes, and these tend to be really important part of the minutes. What they do is they actually put a vote of like X-X-X, so like 0-0-9 or whatever. And the first number is how many voted to increase the rate. The second number is how many voted for a rate reduction. And the third is how many voted to hold the rate steady, okay, for the pound. So you can see how that could be, pretty important. And so looking at that, it looks like, it's basically come in consistently at 0.009, meaning nobody's raised to increase it, nobody's raised to reduce it, and nobody has raised to do anything with it. So basically just leave it, or actually 9 out of 9 have voted to leave everything the way it is. But it's important. At the same time, everybody expects it to come out the exact same. Okay? So you shouldn't expect a big movement on that 4:30 report. Just be aware of it. If it does come out and if it was different than 009, then that could actually be an issue. Okay, because that shows that there is, a change. But you can get that over on the bankofengland.co.uk. It'll be under publications and then under minutes, and then you'll be able to find that information right there. So that'll come out again 4:30 a.m. in the morning, Eastern Time. And let's see, we'll have building permits coming out in the U.S. So this will be a big leading indicator. Here comes out from the Census Bureau, and so we can get that right there. I'll pull it up for you. There you go. And it's the annualized number of new residential houses that are being built during the previous month. So if the actual number is greater than the forecast, it's good for the currency. If not, it's bad for the currency. Hold on right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here, folks, to the Diagnostic Trading Hour. If you have any questions, give us a call at 877-927-6648. And looking on over, seeing what else we got. We got building permits at 8:30 a.m. coming out from the Census Bureau. And again, so you can pull that report in the morning. That is going to be an important report as everybody's trying to judge just the health of the economy as a whole. And so let's see. Then we're also going to have housing starts come out at the exact same time, also coming out on the same website. And then at 10:30, you're going to have your crude oil inventory report. You get that every Wednesday. You can straddle that with Nadex. And a little bit later, you're going to have a couple of New Zealand reports come out, 4:45, the GDP for New Zealand, and the business confidence report. So if you trade New Zealand dollar. And then over, let's see, we're going to have the monetary policy rate statement and interest rate coming out of Japan. But we don't have time. It's a tentative release. So that basically gives you tonight and tomorrow and all the information on that. Give you a little. You want to know when those fundamentals are coming out because they can hit you upside the face if you don't know they're about to be released. Just good to be aware of them. So now on the flip side of things, being aware of that, the other thing you want to be aware of is deviations. And so like right here, I have the deviations plot, and you see as the S&P perfectly hit the one-level diagnostic deviation for the day. And basically that's one deviation based on yesterday's settlement price. And I'm not using standard deviations, okay? Those are outdated. They're historical. They're based on yesterday's movement. I'm not using pivot points, okay? That's there's like 5 different pivot formulas. Pick which one you want, whatever, and they're based on just calculations of past price points. What I'm using is implied deviations. So I'm using the implied volatility, the expected movement of the market built into the underlying options. So like the S&P 500 mini futures options, implied volatility, tying that into a deviation formula. So that's how far the market says the market will move in one day. And it's incredibly accurate. If you don't have access to these, you can definitely get access to them over at TFNN. Just hop on and go over here. And by the way, if you haven't done it already, make sure that when you go to TFNN.com, that you click on Nadex right here. Okay, create an account. You can go from live to funded in little as $100. All right, and you can also get a demo account. So right under here, under demo account, 15 seconds, you're set up. Okay, just fill it in, check your email, you get a password, you can log right in and see what this whole thing's about. And then to learn about how to trade it, or even if you're not interested in Nadex, but ideally I love Nadex. But let's just say you just want access to the deviation levels. Hop over here to the Diagnostic Box Spread Analyzer. You can get a 2-week trial, includes the deviation levels, includes the scanner, and it also includes the training videos on how to trade on Nadex. So whatever you want, you got it right there. All built in, 2-week, risk-free. And go in and go to Diagnostic Deviation Levels. And, of course, you can also post questions anytime you want to. And we can actually look at the current day's deviations. And so they'll all be posted right there, okay? And, again, that's the current day's deviation levels. And it's incredible how accurate they are and how helpful they are at taking profit. And so I like to do sort of a quick market wrap on how would you take profit looking at the deviation. So I'm going to hop on over here. We'll just pull up. It's a little bit faster sometimes if I do it this way. And sort of fly through the S&P. All right. So we got the S&P 500. We had a deviation level at 14.34, then 37, then 41.5. 41.5 was the one deviation. And if you haven't tightened them already, you're definitely tightening them up. So you probably tightened your stop like right here, right at the low of that, which would have been 40.5, and you just would have got kicked out. And you know what? That's a good day. Okay? As far as entries, I mean, there was multiple entry opportunities. Pick one, pull back, push up, pull back, push up, pull back, push up, pull back, push up. I mean, over and over. So you had like 3 or 4 easy long entries. But you definitely had a profit target of how far do you expect the market to move. And, another example, let me pull this one up. The Dow. So if I pull up the Dow, you go right here, and it had a deviation of 13,305. Okay, one deviation move. And let me see, I may even have that chart. Let's see if I got that one up still. On that. Here, I'll open it up, because I'll show it to you in a second. But on the Dow, you're going in on it, and 13,305 was actually a one deviation move. So when we were, down here a little bit earlier, I was looking at an entry on this, and I bought the 13,305 binary. Okay, I bought it for $22. I set it to sell out at 44, 100%. Well, if we got to 13,305, it'd be worth about 50. So I figured, hey, even if I didn't get there all the way, I make 100% return on my trade. Got in, went up, made $22. Now understand, you can do one, you can do 100. Okay, but I had a profit target. I was picking a strike for a reason. I wasn't just randomly going, I think I'll pick this one, So I picked the 13,305 strike because that was a one deviation move, and it had a very low risk, $22. I wasn't planning on holding it to expiration. I was planning on getting out of it when I made 100% return on my trade. I did, boom, in, out, within a few minutes. So, it's about 20, 30 minutes. But, good solid trade, very easy trade, very simple trade, very good way to use the deviation levels. If we go over, let's check out the Russell right here. So let's see, yeah, there we go. Got that Dow chart up for you. And you can see, how it basically just right near the deviation level, and it's holding on. It may still want to hit it. We'll see. But, it's been a pretty, crazy time, so we'll see what happens. With the news and the fiscal cliff and everything else that everybody's watching, just trying to figure out what's going on. But, anyways, it does a really good job. You can see how, you'll tighten it at 0.7s, you'll tighten it at 1s, and you can just see how it just goes in and see how it oscillates right there, 0.5, and then 0.7 before it falls back down. We can go back in history here. Just look at multiple time frames on this. But, here's just a couple days ago. This is the 14th. Market opens up. Boom, goes down. Also, it's right around that half deviation line. goes down to 0.7, chills out, goes back up to half, and then falls on down and finally touches the 1 deviation before bouncing back up to 0.7. I mean, this is, it's just insane how accurate they are. So, I made them, and I'm surprised on a consistent basis. So you go down to 1, and it stopped right there, right at the deviation. Boom, stops, and then boom, stops. So I mean, it's like fibs but easier, and they don't fib as much because it's what the market says the market's going to do. Anyways, but yeah, I mean, if you want a accurate, at least time tested accurate so far prediction level on how far the market's going to move each day, then that's the way to go. Like I said, you can get access to them right now, and they're updated every night automatically. Let's check out natural gas. So on natural gas right here, we had a deviation expectation up to 3.410, then 3.1, then 6.2. So basically that's the different levels you'd be looking at. So we got the 1.0 right here. It's like the half deviation move. And then up to 3.1. So that's right here. Okay. And then we didn't quite hit a full deviation. So basically, hit here, tighten stop on your 0.7. And then you're out on the trade right about here. You didn't get all of it, but you got a good chunk of it, and you're happy with that trade. So, and you didn't give your profit back. That's a big thing. Okay, let's just, be real as traders. When you get into trading, first thing you focus on is profit, and you figure out that's not a good idea. So then you focus on risk, and then you forget about how to focus on profit. And so you need a good objective way to help you manage your profit. Okay, so you don't give it back. This trade right here, you easily could have given back all your profit on this natural gas trade. And so this helps you objectively manage your profit. It can also be useful for, binaries, for picking strikes. It can be useful for spreads, for picking strikes and having realistic expectations on break-even distance, all that. But even if you're just trading the market, period. Very, very helpful if you're trading, the oil, you're trading the ETFs, whatever. Very, very useful. And, we see right here, we're looking at oil. We had an expectation of, a high side of 88.79, a low side of 86.55. Didn't hit either one of those. So what did it hit? Well, we hit the half 88.23. We also went ahead and moved on up to 88.45. So if you're, if you're long oil, all right, maybe from last night you've been long, whatever. Once it got up to 88.45, it did not hit that price until right about here. Okay, that's when you're tightening your stop. You could tighten it again, or you could just tighten it once. Either way, you basically pick the right point, because notice as soon as it hit that deviation, that 0.7 deviation, it just oscillated, didn't go anywhere. And so you're basically done on the trade. But it helped you manage your profit. And then hopping on over, let's look at gold. Gold has been a mover today. And so right here, we got gold. Man, it's down at 1662 right now. That's absolutely crazy. But let's see, where was it at? Let's see here. We got a low of 1670. This is during the actual trading session. Okay, so the pit closed and it kept dropping on the Globex. But anyways, we actually had a 1 deviation expectation on gold of 1684.9. Well, that's right here. Okay, so you can see it literally hit that level, and it did stop for about 20 minutes. It just chilled right here. Okay, right here at this 1 deviation level. So you tighten your stops. Maybe you tighten it again, and which would be advisable when you hit a 1 deviation. And then the thing keeps going. All right, and so our next target is 78.3 or so. So yeah, about 0.3, so right about here. Okay, so we tighten it again. And then our next target is 1671.7. Well, 71.7. So we tighten it again. All right. So basically we caught the entire move. And that can be hard. When you're up a lot of money, this is a massive move. All right. You're talking $27. That's a $2,700 profit on a single gold future. It's hard to hold on whenever you're making that much money, especially when you have days where you get beat up by that much. And hopefully you don't. And if you're a Nadex, you don't. But if you're in there and you're selling this thing, you need to have something that says, hey, it's okay. You're not being greedy to let it keep going. And the sheep's like, take it off now, and the pig's, let it ride. And you got to have something to keep yourself in check. And so this is basically what this will help you with, is you go in there and it's like, okay, here's a realistic expectation of how far the market should move. When it gets here, tighten your stop. If you get stopped out, it's okay. But, this allows you to let your profits have the potential to run without you getting too antsy and just taking the money off before it's too soon. So, let's see here. Let's go ahead and check out silver. I know that's been a big mover as well. And we had silver dropping down. And we had a low, let's see, the pit session. Low of 31.6. And 31.61 was a 1.5 deviation. So right when it hit that, that would have been one of those points where you're tightening your stop up. And that one deviation was at 31.83. So when we hit 31, let's see here, 83. So in this bar, we tighten our stop. All right, so immediately, which is great. That's a great tight stop right there. And then when it moves on down, it hits a little bit lower. And like I said, it goes down to 31.61. We don't hit that here, but we do hit it here. Okay, we tighten our stop again. So great stop. And if you're in the future, you're still short. So we haven't tightened it yet. We're going a little bit lower. We're going down to 31.38 would be the next actual profit target on silver. So and right now we're at 31.40. So we're right there. So we're about to tighten the stop again on silver. And if it breaks that, then we're going to hop all the way down to 30.93. That's the full triple deviation, only 0.3% chance it gets there type thing. Or not gets there, 0.3% it actually gets outside of that range. Because that would surprise the market as a whole, not the news guys, but the market. Copper, what do we got on copper? Well, copper, great for, by the way, new home sales, new home starts, permits, whatever. Anyway, so we had to move down to 3.649. And we had an expectation on copper of 3.39. So really, copper's doing nothing. No big expectation right there, 3.64 really. And we expect it to go much lower than it is right now. And not impressive. All right, so we're going to hop on over and keep moving. No big moves on copper today. And then, whatever you did there, I think you would have had a hard time no matter what you did. But I guess hopefully you're tightening some stops. But you really didn't even have a chance to tighten. I'm trying to see if there's any point. 3.661. Well, 3.661 back at the... Oh, because it settled weird. That's what happened on copper. So there's a weird settlement on it. Anyways, we'll come on back to that at a different time. Maybe. Let's go ahead and check out corn. Let's see here. Corn right now. We got a low of 715.25 on corn, and that's a 716.2. So when it hit this level right here overnight, right there, or early morning before pit opened, basically that means they tighten your stop. The thing starts flying back in the other direction. So probably don't have a trade at all on corn today. Sort of, unless you're trading it early morning. My guess is you probably didn't have one. There wasn't really a good setup because all the action already happened before the market wrapped up. And we'll come back. We'll go ahead and wrap up with the FX. And see you right back after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And right now we're just going through the diagnostic deviation levels. We're checking out soybeans right now. Soybeans moved on down, hit a 1478.7 really overnight. And that should let you know that when we hit that one deviation level, we're pretty much done for the day. It did push on down to hit the 1.5 deviation just before the cash open. So you're pretty, done on soybeans. And then on euro dollar, we'll go over and check that out. Euro dollar moved on up to a nice high. I mean, it just hit at 1.3237. And on the euro dollar, we were expecting 1.32, let's see, 21, and then 1.325, so that'd have been right here. Okay. So that's our one deviation. 250 would actually be the next half deviation mark. At this point, you're tightening your stop at least here. Okay. You may want to tighten it again depending on how you trade. You may want to tighten it again here, whatever. But at this point, this is where you should at least have your stop tightened. at a low of 1.3215. Basically one tick below that low. Since we've passed the 1 deviation mark, we really should not expect a lot of further movement the rest of the day on the euro dollar. And let's see here. We got pound dollar. Let's see what it's done. And where will we tighten those stops if you're in the pound dollar right now? Well, it went up to 1.6268. On pound dollar, we expected to move up to 1.6232. Well, it hit that right away. So right there, we got this knocked out. And then 1.3246. So hits that in this bar. Okay, so that's a 1.5 deviation. So we're tightening it again. And then let's move on up a little bit further. 1.6260. What is that right here? All right, we had a 2 deviation move. And the next move is actually 287. That's a 3. And really 1.5 would have also happened already. So you could have tightened it up again in this bar. But definitely at this point, your stops right here, you probably just got kicked out. And you're done for the day. So say thank you, pound dollar, for paying me a lot of money. And I'll see you tomorrow. Looking on over and checking out the Aussie dollar. So Aussie dollar, what we got right here? Got a low of 1.0515. And Aussie dollar, we're expected to move down to 1.0507 would be a full deviation. Didn't quite hit it. But it did hit that 0.7, 1.0520. So what that is, I gave you the chance right here to tighten your stop. And would you be glad you did? Yeah, because it gave up like 25 pips on you. So perfect trailing stop, okay? And let's go ahead and look over at a few more pairs before we wrap up for the day. We got the U.S. yen with all the elections, everything else going out. That went up to a high of 84.19. And U.S. yen, 84.17 actually was where we should tighten our stop. So you would have tightened actually here. And you would have been out right now. And, again, not upset that you did. And then, because the currencies are sort of toast at the moment. They could reverse. I don't see them going a lot further. 0.9123 on U.S. franc. On the downside, 0.9129 actually is a 1.5. So you actually could have tightened it right here, and you'd be out. So let's see here. We go a little bit further. I think we got like 1 or 2 more pairs left here. U.S. Canadian. And then we'll do a quick market wrap, and I will see you tomorrow. But looks like it's moving on up right now to a high of 98.54. And 98.54 actually is a perfect 0.7 deviation. So hit it right here. You tighten your stop. Call it a day on U.S. Canadian. So, anyways, great day, great trading day. Get access to these deviation levels. Hop on over to TFNN's website. And stay tuned. We got a great show coming up for you. And we'll be, I'll see you right here tomorrow. Same time, same channel.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.